Wall Street is regaining confidence in the light of the speech by Fed Chairman Jerome Powell. Having absorbed his remarks, investors are anticipating the crucial inflation data. InstaForex analysts have already assessed the main market developments and news. On Tuesday, Wall Street had an excuse to bet on the softer Fed, thus reviving the risk-on mood. The benchmark stock indexes were able to recoup early losses and close with decent gains. Jerome Powell soothed market turbulence and encouraged the stock market, but notes poked it as usual, following comments from his colleagues. The major stock indexes welcomed the rhetoric of the Fed chair. In the end, the Dow Jones rose by 186 points, or 0.56%. The Nasdaq added more than 1%, the S&P climbed by 0.7% to close at 3,919. This trading session is going to be quiet. The stock indexes traded sluggishly in the New York pre-market. The euphoria calmed down, and now the market is in suspense ahead of the inflation data. Futures on the benchmark indexes inched up. The S&P500 is expected to trade in the intraday corridor between 3,890 and 3,906. The stock market owes its revival to the dovish tone in a Jerome Powell speech. The market response looks like relief rather than a cause for optimism. However, this fragile optimism was enough to arouse the appetite for risk. In his first public appearance this year, Powell said that bringing inflation down to 2% can require measures that are not popular in the short term as we raise interest rates to slow the economy. The market signed to be the relief because the Fed leader evaded any hints about the policy outlook and did not reinforce the hawkish rhetoric. Instead, Powell spoke about independence of the central bank from political influence, so investors are shifting focus towards inflation data. Amazon shares grew 2.9% on Tuesday, providing support to the Nasdaq and the S&P. The telecom sector showed the best intraday performance. The energy sector also gained ground in sync with the oil prices. On Wednesday, the stock indexes extended their growth on the back of hopes for waning inflation. If so, this could assure the US Fed to moderate the pace of rate hikes and decrease the likelihood of a deep recession. Optimism is dented by fresh forecast by the World Bank. It slashed twice its forecast of global economic growth for 2023, warning of a recession in many countries. Now the World Bank expects global GDP to grow by 1.7% this year, the third worst trading in the last 30 years. The worst GDP figures were recorded in 2009 and 2020. GDP was projected at 3% in the previous forecast. This week, top US banks are due to report their financial results for the fourth quarter. Analysts estimate that the total profit of the S&P could have declined by 2.2% in the fourth quarter from a year ago. Investors want to find out whether Goldman Sachs will keep its employees. The investment bank is launching a large-scale campaign to cut spending, and looming layoffs will be the largest ones since the financial crisis. About 3,000 employees will be fired. The company shares grew by 1.2% in the pre-market. The stock of high-tech giants such as Apple, Tesla, Amazon, Microsoft, and Meta traded mixed before the opening bell. Analysts at JP Morgan say that the US CPI for December, which is due on Thursday, is likely to match the consensus. It suggests the bullish prospects for Wall Street. The US dollar is also regaining its footing. Its index is showing resilience, trading at about 103.30, having inched up 0.11%. The intraday corridor for the index is seen between 102.90 and 103.60. The US dollar is trading merely flat today in anticipation of the inflation data. Fed Chair Jerome Powell didn't give any clues during the panel discussion in Stockholm. Other Fed policymakers said that further policy moves would depend on economic data, so investors are in the wait-and-see mood. The US dollar index is pinned at the lowest level in the last 7 months. Another drop in the CPI will push the greenback down, and this will increase the odds of a rate hike by 25 basis points. Alternatively, if inflation went up in December, the US dollar would assert strength. With the US dollar's rally, the market will attach importance to the hawkish forecast by Fed policymakers. Meanwhile, the US dollar is trading under pressure while the market clings to hopes for a slowdown in inflation. The loonie is also consolidating its weakness after a 0.1% uptick. The USD CAD pays are trading at around 1.3424. The intraday carried out of the pair is seen between 1.3380 and 1.3470. Though the Bank of Canada remains hawkish, it signals flexibility and further policy moves depending on economic data. Now the regulator is poised to raise interest rates at a slower pace but for a longer time. Canada will report on its inflation next week. It means the loonie will be affected by the US dollar and oil price swings. Oil prices are growing today. Brent crude has added 1.6% to trade at $81 a barrel. And WTI jumped by 1.7% already after the weekly industry update. US oil inventories expanded by 14.9 million barrels last week, defying a forecast for contraction. Cryptocurrencies are eager to consolidate their gains. Bitcoin was desperate to settle above 17,400. It slipped below this level in the early American session. The token lost 0.5%. Altcoins traded mixed in the pre-market. Bankrupt crypto lender Voyager Digital received initial court approval on Tuesday for a proposed $1 billion sale of its assets to Binance. Besides, Binance acknowledged that the crypto platform did not always ensure the funds necessary for keeping the fixed value of its native stablecoin. So such news is certainly negative, but it can hardly trigger serious market moves. The digital assets are trading mainly sideways. Bitcoin is trading within a wide range between $16,500 and $17,600, though the trading range for today isn't tighter. Make sensible trading decisions with the InstaForex analysts and see you online tomorrow.